Hello everyone. So welcome again to another video. This is just a continuation of whatever I just uploaded recently. If you check, I just gave a signal live on gold that we are selling from here, targeting these lows here. And that video is over here. If you go to my channel, actually I just uploaded it right now, this one, 7 minutes ago. So you can go and check it out. And also check out these other videos. There's some really good information, especially this advanced ICTP arrays. In this video, I explain some things that people barely talk about. People don't even know about that. We have discount to discount connection. You can have a discount of a previous day or a discount or of a previous week in relationship to the discount of this week or this day. So it's very important. If you're on a discount of a previous day or week and you're bullish, that shows that you are in a good or a high probability trade. The same way, if you're looking for sales in a bearish market and you're in a premium of a premium, maybe of a premium of a previous day or of a higher time frame, that means that you're in a high probability setup. So I explained it a little bit on that video. So back to where we left from. So as I explained earlier, that this was a silver bullet entry, and actually maybe people who, because I gave entry on 5 minutes, maybe even a person would want to do it on a 1 minute, uh, could also do the same, could also check the same. So there's so many ways for entry in this market, like the one I gave for 5 minutes. And let me just do a quick analysis on it again, though I had done this on the other video. So but let me just do it. Okay, so I explained in this manner. The silver bullet 10 a.m. candle, remember I'm using UTC plus 3, had just been taken. The I mean the liquidity resting above by 11 a.m. Remember, this is the silver bullet time, and also remember this is also a time of there's a macro of 11:03 to 11:30. That is UTC plus 3. So that's another confluence on it. And once we took liquidity above this one here, and given that this candle closed back in relationship to the previous candle, this was a good sign. Okay, so once we took the liquidity, I was already placing myself for sales. But remember, for you to have optimal entries or good entries, you need to move into lower time frame. You can use 3 minutes or 1 minute or 5 minutes. So for example, this the candle of 10 a.m. took liquidity up here. Once we took liquidity, it dropped back down, okay, creating a fair value gap here, as you can see. And now we kind of also have a break of structure or market structure shift here, okay. Then if you take a look closely, we have an inversion fair value gap, which price respected, see. So you could even enter here, sell it now. When you enter here and you have this kind of confluences, now you don't expect price to go up back there. You put your stop loss above there. You still sell it. And this is also actually, if you take a look at where I was signaling that sell, is the same thing with 5 minutes. When price dropped, it created a minor fair value gap here, as you can see, this one. So you wait and sell on that bearish fair value gap right there. Okay, that bearish fair value gap on 5 minutes. It is the same thing. You put your stop loss up there, because now on 1 minute time frame, we've realized that price is so focused on going low. There's no need for us to go. There's absolutely zero reason why we should go up here. As you can see, this was a liquidity trade. Liquidity had been swept up here. And the same thing to 3 minutes. So I usually use 3 minutes, 1 minute, or 1 minute. You see, 3 minutes, if it's even clearer. We had this bearish fair value gap. Once we took liquidity at 11, drop here, price come and fill that gap. This is where you enter now, and you drop lower, targeting these lows. So leaving that behind, let's now focus to now the serious matter, where I expect gold to go to. And guys, remember, we are bullish on gold. The reason I'm selling gold is because it had given me a signature that I'd like to see, especially or price action that I'd like to see at that time. But I'm so bullish on it. I'm waiting for it to come down somewhere here, then I buy. So why am I waiting for gold? First thing, This is the Monday's candle. So we have two options. Either we come and take liquidity below Monday lows, okay? Because today is Tuesday, that means that we are going to be manipulating these lows here. Then we buy, then we go higher, okay? And I don't really expect that to happen because in the previous video, in another video also in this channel, I'd also explained why we reversed from here. This one here was a bullish fair value gap, and the price came to the consequent encroachment of it. You see? So that's why we started going up because gold is very, very bullish, right? So I don't really expect us to take liquidity below this Mondays. But remember that it is all probabilities. This can also happen. But what I expect to happen, what I would like to happen is this. I'm going to be using this week. I'm going to be using this week to give us entry model. So I'm going to mark the consequent encroachment of this week. Let it be daily week. Consequent encroachment. Okay? That's the midpoint of the week. This one here. So I don't really expect us to really come down here. You see this midpoint? This is where I'm expecting price to be traced to. So when you move now into 4-hour time frame, you'll also realize that we have a bullish fair value gap here, which is a good sign that price is interested in going higher. You see this bullish gap? It has not been fully filled. Okay? So it is still pending. You see down here, this one here. Yes, price needs to come down here and fill it. Okay, and when it fills it, we are going to the daily wick of the previous day. Remember, this is a previous day wick consequent encroachment. Okay, so we have a bullish fair value gap here. Then also, when you go to 1 hour, we also have a bullish hourly fair value gap here. Hope you guys can see that, this one here, which was quoted yesterday. It is not also fully filled, so I expect price to come down and do what? Fill it. That's why I'm selling here and I'm targeting to take my profit around down there, okay? Because we are coming to fill it. Then once we fill it, we are likely to bounce towards this daily week consequent encroachment. Then we are going to be having longs from here. So let's assume I want to enter from here. I'll probably, for some people they put the stop loss here, but I'd put my proper stop loss around maybe let me say around there. Okay, then I'm gonna target all-time highs. I'm gonna target all-time highs. Okay, not unless, but just to be safe, you can target this like the previous day highs, the Monday highs there. That's around 128. Then you, because the next day we are likely also to retrace. So you don't know how far we can do. We can even retrace to come and check this liquidity below here of Monday, which I don't really expect to happen. And guys, remember also, I gave you guys a signal on last week on yeah, it was on Friday. Yes, it was on Friday. And I told you that we were coming and this law was not going to be touched. And this is where our stop loss was being. If anybody can remember, among these videos, just go take a look at a video that I uploaded last week about gold. I gave a buy signal here that our stop loss was going to be here. We're going to be buying and we're going to be targeting this highs. All there. Or the all time high highs, okay? So that's it for now. And just in addition to the concept of having the concept of having discount into discount PDRA or premium into premium PDRA, let's do something here. Let me show this again. This nobody talks about this anywhere else. Of course, this is ICT concepts, but this is just something I came to realize that okay, I can use it. I can use it as a more confluence or add it more to give me more confirmation of exactly what I want to do. Okay, though this is an ICT concept, but whatever I've done is just to add my little, knowledge to it. So our day starts from here. This is where Tuesday starts from. So the high of Tuesday is right here. Remember, this is a hourly candle, so right there. Then where is the current low? Is down here. So this is the equilibrium. All down here is the discount level. So meaning that when you're down here, we're likely going to be looking for buys. And you see, price went to almost the equilibrium zone for us to sell it. And I expect us to have a new low around here, and might be the low of the day. Then now we go higher. Okay, so that is just to measure the or a technique that you can use to measure from discount to premium using the daily profile of current highs and lows. And remember, you can also use it or even on previous days. For example, if yesterday, when was the opening of yesterday? That was Monday. So Monday opened here. Monday opened here. We created this low. So this is the low of Monday. Then this is the high of Monday. Okay. So this is the equilibrium. So meaning that when price drops below the equilibrium, we're supposed to be looking for buy. And guys, where have I positioned the buys? Around here. This is discount level. So you see, on today's profile, we are on the discount level when price is down here, and as well discount level in relation to the previous day. I hope you guys can see that relation. Okay. Yeah, so I'll continue to make more videos on discount to discount relationship, but I hope you guys are taking notes on it. And in case of any question, in case of anything anybody would like to like me to cover, you can leave a comment and ensure that you subscribe, and also press the like button if you like the video, and hope to see you soon.